Hello traders, Gary Wagner here. A little bit after 11:30 in Honolulu, 4:30 in New York City. It is Thursday, the 8th day of March 2012, and this is the daily report for gold and silver. We have a market which has been higher, and in a strong sense higher. We did issue buy triggers this morning in both gold and silver. On today's report, I want to spend a moment talk to you about the charts that I sent out, the triggers that were issued, how they were actually issued, what conclusions we came to, and most importantly, what are our upside targets on this trade. All here on today's daily report. Traders, let's get right to the board. The interesting thing is we've received similar patterns in both gold and silver. The first one we'll look at, this is our daily chart. And this daily chart, of course, is of spot gold. And the pattern that we talked about yesterday that we saw was simply a pattern called a piercing line. Now, a piercing line in terms of straight criteria is fairly simple. First rule, it has to occur after a defined downtrend. Obviously, we've got that here. The second thing you need to see is that you get a long red candle, meaning a down day that has a significant range between where it opened and that lower close. Now, what happens is on the following day on a daily chart, you get an open below in a COMEX chart or at in a cash continuous contract chart, and it has to close above the midpoint of the prior candle. You get that right here. Now, you can't take that call because in many occasions you might get this scenario without confirmation or simply put follow through. It's not the kind of valid signal that you look for. And so what do we look for? We look for confirmation, which simply put is on the following day you have a candle that has a higher high and a higher low, and of course it opens below the close. So we met that criteria, as you can see here. And many times when you get these key reversals, you'll get them with that type of a candlestick pattern. So here you have an engulfing bullish that's confirmed. Here you've got a variation off a three-river morning, but as you can see, again, that type of confirmation. Here, an engulfing bullish that confirms. And here you get a piercing line that confirms. So it is a very relevant type of pattern that we look for key reversals, and we received it not only in the gold market, but in the silver market as well. And we'll talk about some of the goals in a second, but the next chart I do want to take a look at is our daily Henkin Ashi. Now, that is a chart that is always going to lag behind any kind of a leading indicator, but what I'm finding interesting is even though it is a lagging indicator, as you can see, we've got this first pivot candle right in here. In other words, you see this doji-like candle, and that doji-like candle is already going green. You get these pivots typically at bottoms and tops as that reversal comes into play. You'll get those small-bodied candles right before the market tends to take off. So therefore, that's a secondary reason that this buy was triggered. Third was when we actually look at the Elliott wave count and what we're expecting within the marketplace itself. Let me see if I can't blow that up for us a little bit here. Now, this is a 720-minute chart, so you're going to get a couple of candles per day, but as you can see, you've got this V-shaped formation, and in terms of what we're looking at, this isn't going to be a big play trade like we got before, because traders, we are not going to buy the bottom, nor are we going to sell the top. We have to get confirmation in both occasions and on both sides. However, what we do get is as follows. We are currently in a consolidation and corrective period. In other words, this was our wave 1 right here, and now we're in wave 2 right in here. And just as in wave 1 we had a 5 count like this and 5, we are expecting a count of 3, meaning we're expecting an A, a B, and then a final C in this corrective stage. So traders, we're just trying to play this B bounce. And where are we looking for in terms of a target? Well, our targets, as we talked about last week, are going to be anywhere between 50 and approximately 75% of the gain that we saw in terms of the drop of this A wave. So simply put, what we are doing is we're measuring the range from this top here to this bottom, and then we're saying if the market itself moves up 50% from here, it takes us to 1735, and 75 takes us to 1764. So we're not looking for a tremendous gain, but we do believe that there's a good gain possible in this. We want to be careful because when the C wave comes, it should be fairly quick. So anytime we see it approach 1735 and move into this area, that's when we want to be cautious and look to protect profits should we be fortunate enough to get them. Let's go on to our silver market because we have a very, very similar scenario. Again, our daily chart, piercing line, confirmation on the following day. As you know, when I sent out the buy trigger this morning, I talked about stops. Stops need to be placed below these lows in gold and lows in silver, to have it make some sense. However, I would like to see support form in the area of silver right at around 33.20. And in gold, it's going to be just below 1700. And those support areas, once we see this market take off to the upside, in other words, once we get validation that we're on the right side of the fence, we're going to want to trail that stop up higher and trail it up as quickly as we can, as I said, in anticipation of that C wave coming. This has been Gary Wagner, wishing you as always good trading. We'll talk to you tomorrow for the weekly wrap-up and update. Bye-bye.